So Larvotto resources. Three things that I'd like you to try and take away from the presentation today. The first thing is gold and antimony. So that's one, antimony and gold. Second is near-term production. And the third is value. In the photo behind me, you can see the Hillgrave gold and antimony mine in just 23 kilometres east of Armidale in New South Wales. Larvotto purchased Hillgrave from the administrators of Red River Resources in only December last year. And so that is the processing plant that is on site there at Hillgrave. It's a notionally 250,000 tonne per annum plant with a very modest expansion, literally a secondary crusher. It'll be a 500,000 tonne per year producer very shortly. So that's already in place. That's a replacement value of that processing plant of something north of $200 million. We paid $3 million. So antimony. As of about 3 weeks ago, most people in this room probably didn't know what antimony was and couldn't pronounce it. And don't worry, that's not a criticism, because a year ago we couldn't pronounce it either. We've now learned a little bit more about antimony, and as I was saying 3 weeks ago, what has happened is the Chinese government has announced that they are going to restrict the exports of antimony. They control the market. They're going to restrict the exports of antimony from China. That starts on this weekend, on the 15th of September. What that actually does and means to the price of antimony, we as yet don't know, but we've got a chart on the next slide which I can talk about. So antimony, why are we interested in antimony? It's a small market, it's about 150,000 tonnes per annum. The main use has always been historically, it goes as my good polyester suit has a flame retardant in it, it'll be antimony based. So it's primarily been used as a flame retardant in materials. The key growth sector for antimony is solar panels. That's gone from about 0 3 years ago to absolute exponential growth, and it's still going off the charts. So it's going into solar panels, into solar arrays. There's a couple of percent that goes into the glass. It clarifies, the antimony clarifies the glass, marginally increasing the efficiency of a solar panel, which are not very efficient to start with, so even a minor increase in the efficiency is a good thing. So it's solar panels, it goes into defence, in defence sectors, and as a fire retardant. But there are literally sort of uses everywhere. I went and saw a dermatologist, and there's a skin disease that is fixed by antimony. I'd never heard of it, no one else has ever heard of it either. I can't even repeat the name of the skin disease that it fixes. As we got there, antimony is on the critical minerals list on all the major countries, and as we can see there, China controls the market. The interesting thing is China has a lot of old antimony mines. Their mine production has in fact fallen by more than half in 10 years because the mines are all getting deeper, and as we'll see later on when we look at Hillgrave, as antimony mines get deeper, the antimony drops off, the gold picks up until you get more gold. So the mines they might be old, they're probably very productive and probably very profitable, but they're probably becoming more gold producers than antimony producers. So that creates an issue, and China is trying to seek and suck in more antimony concentrates, such as we will be producing from Hillgrave. They also want to make sure that antimony really doesn't go towards America. And so what's happened to the antimony price? As I said, we only bought the Hillgrave mine, which is on care and maintenance. We bought it in December last year. The antimony price at the time was US $10,000 per tonne. A little over 8 months later, the price is, as you can see in the chart there, is $26,000 US per tonne. So it's had a dramatic movement. We haven't seen, because it's a thin market and the prices are only updated weekly, there's only been a couple of points added in the time since the announcement of the Chinese ban. We're very interested to see what will happen to the price. But I actually don't care if it stays where it is or even pulls back a little bit. It's a fabulous price compared to history for antimony, as you can see from that chart. So Hillgrave, what's Hillgrave? Said it's just outside Armidale, a large regional city with great schools and a university. It's Australia's largest antimony deposit, top number 8 in the world. Most of the others in that top 10 are in places you and I don't really want to go to. Tajikistan's and others, and Russia. As you can see from the third point up there, in May we have been drilling some of the deeper deposits. I said we're getting down. A couple of the deposits are actually some of the gold rich. We put out one intercept at 31 metres of 2 ounces. I'll come back to it later on, but that ore body, the Bakers Creek ore body, isn't in our resource or our exploration target. It's all upside. So we actually have now, just as of the first week of diggers, so first day of diggers about a month ago, Larvotto released its pre-feasibility study for Hillgrave, and the next slide I'll go through some of the metrics from that. But it's based on, at the same time we had to put our maiden reserve, that is 606,000 ounces at a 6 grams of gold equivalent grade. The resource at the moment, of which that reserve forms part of, the resource is 1.7 million ounces at 7.4 grams per tonne gold equivalent. So it's already a very large and very high grade, one of the highest grade gold resources in the country. And not included in that 1.7 million ounces is we put out more recently an exploration target of circa another million ounces also at very high grade. And those are only effectively just below our existing workings, odd drill holes through it, got ore grade intercepts, but not nearly enough sufficient drill density to bring them into a resource. But we will. So there you have it, a very high grade, large resource and reserve. So I come to the pre-feasibility study. And it's saying the reserve, 600,000 ounces of good grade. It'll produce about 80,000 ounces of gold equivalent over a 7-year mine life, and only requires around $75 million of capex for us to put the project back into production. And that's split about sort of equally between, we want to do some work in the processing plant that is already there. We also want to increase the underground mine development. There's already 10 development levels underground, fully developed. We drive into the ore body, down the decline, into the ore body. There are drill holes already, shot holes already drilled in one of the stopes. We could go in and fire that tomorrow and start producing. But we're not doing that. We're doing all the work to make sure that we have all the studies lined up and it's going to be well capitalised for when we restart production. And then for the metrics, what's the project worth? Well, at the spot prices, we used 2,000 gold, 15,000 US for stibnite, and we had an NPV of $160 million odd dollars and a very high IRR. The spot prices that we used for the other metrics in the second column, as you can see, show and those spot prices are both out of date, as is the exchange rate, and it shows an after-tax NPV for the project on out-of-date spot of nearly $400 million after tax, all from a 73 million capex project. They're pretty phenomenal sort of numbers. I'm an old analyst. I used to always work on trying to divide an NPV by the capex to see how good a project was. Those sort of metrics do not come up very often. Noting too from the slide that we're already well into the definitive feasibility study, so the PFS is out. We will complete the DFS by the end of this year and move into a financial investment decision. Well, unless something goes dramatically wrong, it'll be a yes. And then 3 to 6 months will be project financing to raise the $75 million. Our share price has sort of been going quite well. We've had a number of calls. People wanted to raise all the capex last week and the week before, which we've been telling people, look, we'll hold off on doing that, but we certainly could have done it if we wanted to dilute our equity a little more than I think we need to. So we're holding off on that at the moment. And as it says there, this is a very de-risked project given the fact that there's a processing plant, underground development, it's on granted mining leases, we're fully permitted, including tailings. We want to do a new tailings facility, but we can lift the existing tailings. We are fully permitted. We could start mining tomorrow if we wanted, and we're funded. And we're targeting to have commercial production early 2026. However, if other things align, we could certainly be in production towards in the second half of next year, not last year, second half of next year. Some more detail on our reserve. I won't spend too much time on that, but just to shows there's, in terms of contained gold and contained stibnite, the antimony converted is over 600,000 ounces. Again, a good grade. Just noting too, the grade there is, it shows as in equivalent is 6 grams per tonne gold, slightly lower than the resource grade because it's had mining dilution applied to and losses applied to those estimates. The actual resource there, as it shows, there's 1 million ounces of gold in the overall resource, and further contains stibnite of 93,000 tonnes. When you convert that, it's about 700,000 ounces of gold equivalent, and 700, and so that's where you get the 1.7 million ounce resource estimate. I've talked very briefly about the exploration target. Before I get to that, the DFS, I said, we're aiming to be out by Christmas. The key work involved in that is actually because mining studies are done, the metallurgy is well underway, but we're doing a lot more test work on the plant. There's some very trick new technology, microscopic level, that we're utilising. So that is being brought into our and to optimise the metallurgical. And it's funny that optimisation is in fact a word that we use a lot when talking about Hillgrave. Hillgrave's got a long history. It's a 140-year-old mine. It's been run as a gold mine. It's been run as an antimony mine during both world wars. It's then run as a gold mine at other periods. But no one has, particularly through its whole operating history, optimised it for both gold and antimony at the same time. We will absolutely be optimising it for both. So that is something that it really hasn't been done before, and it's going to be properly capitalised again, which we see as some of the issues that have caused it in the past with metallurgy, because Straits tried to produce antimony metal, which was never going to work, in an SXEW plant. It failed. We're not going to be doing that. We're just going to be producing an antimony concentrate, a gold concentrate, and gold doré. And there's very, very deep markets for both of those concentrates. We're in very well advanced discussions with the major metal traders for both streams. We will have announcements out on the offtake in due course, but that will bring in more funding for us at that time. One thing that the definitive study will also hopefully show, if we have time, is that there is so much exploration upside in this project. We can't bring, for the PFS, we weren't able to bring all of that in, but there is a huge amount of upside to come from the geological side of this business. If you have a look at the very top, there's if I can see if I can do this, there it is, up here. That's the Clark's Gully deposit. Clark's Gully, we have an RC rig drilling that out now. It's already in our reserve. We're extending that. It goes back over the road, so that will be extended. But that's a 3.5 kilometre straight line of mineralisation of trend back to the processing plant. Along that trend, and you'll see it repeated with all those dots all over that map, there are mineral occurrences, or we've got drill hits, random drill hits of ore grade intercepts several times along the 3.5 kilometres out to Clark's Gully and on the parallel trend. Never followed up. So our geologists are working very hard to implement programs that is going to do exactly that. So if this thing's going to, if we've got, as I've talked about, 1.7 million ounce project or a resource now, we have a 1 million ounce exploration, so a target, that's 2.7 million ounces. Bakers Creek and other deposits are outside of either of those. It's very easy to see that this is a 3 million ounce field, we believe, in our view. But we have to confirm all of that with the drill. And so the geologists are busy with their coloured pencils drawing lines of mineralisation all over this, and we'll be following those up. I probably will skip forward. This shows the exploration target sitting below our current workings and historic workings in the field. We have all grade intercepts below the resources where those exploration targets are. They just need more density of drilling, and that's what we're going to do. Here's the Clark Scully drilling, very high. These are, if you look at the grades there, sort of 10% type, and higher, sort of antimony. This is surface, so it's high antimony. Our underground development is, as I said, already in place. We have 10 levels already developed. Another plan showing a lot of the areas that we need to follow up with Bakers Creek. That's Bakers Creek there. That's not in any resource at the moment. It will come in. So we're almost completed. Most of the major aspects for the definitive study. Metallurgy being the one that is going to take us through to Christmas, and then for a project already had well over $200 million spent on it for the processing plant, for which we paid very little. We talked about value very quickly. We talked about earlier in the slides there are two other good comparative companies to us. Southern Cross Gold, who's drilling in Victoria, 500 million market cap company. Full disclosure, I'm a very happy shareholder in Southern Cross, and Mike Hudson's doing a terrific job with that company. And so they've got an exploration target. At the moment it's 1.7 million, but he's now talking a 3 million ounce exploration target. Well, we're gonna have that certainly we'll be at that level certainly within 12 months and be in production shortly thereafter. Southern Cross is probably 5 years from production, so we are a long way ahead of a 500 million market cap company. The other key one is Perpetua Resources, which is in the US with a antimony gold project. It listed on Toronto, has a minor antimony credit, but is more a rich gold project. But it's going to be a $1.2 billion development for supposedly calendar year 28. And its market cap is nearly $900 million. So we're at a market cap, as you can see there, today it's about 125 million, bounces around a little bit, versus 500 and $900 million comparators. So it's one of those three things I mentioned. So there was gold and antimony, I think we've done that. Near-term production, we've talked about that, and the value opportunity is here. We're an absolute fraction of where these other companies are, and with a project that is 3 to 5 to 8 years ahead of them. And that is it. I'm being wound up. Thank you very much.